Hi, everybody. Happy Sunday. Today is the 11th of June, 2023, and big shout out to everybody for taking their Saturday and joining me yesterday. I hope you had a great time. I understand it was 4 hours of a lot of information, but one thing, if you didn't get from me, that I would like to share with you is every day is a learning day. In the trendy trading room. So we always start 30 minutes beforehand. We discuss the market, we discuss how we feel, we discuss what we're looking for. So I just want you to understand it's continued education, and I love to teach. So don't worry if there are some things that you didn't quite get. I'm sure we're going to have plenty of days and plenty of time with each other. So again, thank you, and I look forward to trading with you. Let's talk about this week. This is called a broad market analysis. It's really straightforward. And the first thing that I want you to understand is that you have to go to the room and look under the folder. All right. So if I bring this down really quick, you're going to see right here that you have a folder. Okay. And I want you to click on that. And inside that folder, it's kind of hard to see, but you click on images. And in here are the latest um, charts. The ones that we are about to go over are sitting right in here. All right. And you can see that I put the dates on them. So just look for 11 June. There's your NASDAQ, the ES futures, the SKU, the QQQ, SPY, bigger picture. We're using the quarterly chart. And then we have the QQQ, neutral strat, market watch, and all the stuff that I'm basically going over with you. And this video, the reason why I do this video is because I've been doing it for so long, like many, many years, and I have to speak it and see it in order for it to be instilled in me for the week coming up. So let's go ahead and get started. We are covering the 11th through the 16th, and the reason why I always say the 11th is because we can use the future chart starting tonight when the market opens, which is going to be 5 o'clock Central. This week, I use Earnings Whisper on Twitter. It's a free site, and so this is where I get my information. I would always say check with your broker just to ensure you understand what's coming up. So again, the biggest names that I have focus on would be Oracle, Lennar, and Kroger, and then Adobe. Everything else I'm not too familiar with. But these are just the names I want you to be familiar with in case you're in a name that is related to it, right? So, for example, if you're in Lennar or you're in something that could be affected by Lennar's earnings, just keep in mind what you're doing there. Okay. But anyways, pretty quiet. It's getting, to the end of the season, and this is really interesting going into this week because I am saying right now I'm extremely cautious to the upside until proven otherwise. That does not mean that I won't trade to the upside. It doesn't mean that I don't have long-term uh, longs on. It just means from an intraday perspective, I'm considering how much do I actually get back before we get a healthy pullback. All right. And again, end of earnings season, and you'll see a couple things in here where it's still suggesting that we have to be on our toes. Okay. Now, this is the economic calendar. I use Market Watch. Once again, this is free, and so it may be missing some details. But the big thing here is for us just to take note of things such as core CPI on Tuesday. These are news, events, econ data that could cause volatility in the market. As you know, we use our levels and we wait for prices to get to those levels, and news is a catalyst that pushes it there. And I absolutely love that because when we don't have big news events, the market tends to be a little slow, a little droopy, whereas these can cause some volatility and make it much more exciting. On Wednesday, we have core PPI, and then Fed decision. This is a big day on Wednesday, and then Fed Chair Powell press conference. So you guys know how this goes. I love this because I'm able to really show you guys the power of the zones, and these are great days to show you the proof of concept how those news catalysts just push price into the zones, and then in the zones you'll see those traders show up. On Thursday, we have initial jobless claims, retail sales, and then we also have on Friday Christopher Waller, who is speaking, and then consumer sentiment. So Definitely not as dull as last week. I've been waiting for this week myself. I'm really interested to see what happens here. There's a lot of confluence in the market that's telling me, and you'll see that here in a few seconds with the Feds, with earnings slowing down, with us coming close to these big supply zones. It's now or never, in my opinion. I shouldn't say that because it's the market and it changes every single day, but we are really, really close to some sort of hopefully some kind of healthy pullback to kind of reset the market. Anyways, this is going to be right here what we're looking at. I call this the neutral strat, and we do this every weekend. And this neutral strat is from last week. Okay. So this is from last week, and these are the results. This is what has happened. All right. And what you'll notice is that it was really, really dead this week. We stayed in the neutral. We popped a couple times over. Definitely some false triggers here. And then finally, we made it up to the 431 level. But if you think about it, where we opened on, Sunday, Monday, and where we ended, it was an absolutely sideways week. Pretty boring. Over here on the QQQs, we did get, again, a couple false signals to the upside, broke down. We did end up hitting T1 at 347.18 and then moved up, and we just could not stay above the neutral. Now, again, if you go back and listen to last week's BMA and the BMA before, these are my expectations. I mean, how much more could the market move, right? And I think that we're just kind of stalling here after a big run, and we're waiting to hear from, Fed and see what Jerome has to say. To me, the interest rates, how much of a impact will they have after all this time? I don't feel like it would be a lot, but it could be a great excuse to reset the market a little bit. All right. And again, I sound a little biased, and I've been like this for the last 3 weeks. We're still going to trade what we see, but there's just a lot really shaping up to say, hey, pump the brakes. Next thing is this week's neutral strategy, and it's been a while since I've done this, but I did not change the numbers. Okay, so this chart is the same one we used last week, and I don't typically do that, but I am doing that for this week going forward because we really didn't test the levels per se. We really didn't move much, and I still believe that these levels are going to work well going into next week. All right, so our next picture is going to be the SPY bigger picture. I like to do this and I update, and you guys can read the updates if you like. This one's really straightforward from a quarterly perspective. You have 19 days and 7 hours until this candle closes. And if you look at it, is a continuation candle, is 3 quarterly candles up in a row. We push through the bull channel, and what happens is that your immediate support is now that 23.6, which also, if you could see there, your future yearly edge is right there as well. So this is a great area for your immediate support, but use the cloud as long-term support, and that's what that LT stands for right there. So long-term support, if you're one of those traders that only comes in a little bit throughout the year, that would be the main area that I would be looking for this rally to continue. So even if we got a healthy pullback, like I keep saying, it's still bullish as long as it can stay above that cloud and that 38.2. So roughly about 390. And your target to the upside, if we continue this rally, and whatever Jerome says is actually bullish for the market, I would expect us to push up into about 446. Okay, so that's my next target to the upside. Let's go ahead and move into the NASDAQ. Same thing here, QQQ, bigger picture. You can read the latest update. My immediate support is going to be that 346.87, which you can see right here, which happens to also be last year's 23.6, but also the future yearly edge. All right, I love math because these have nothing to do with the 23.6, but they're confluent, and that's just how it works. Your long-term support, same thing as I showed you on the SPY. It's around 309, 310, and I want you to be cautious towards this white line here, which is around 362 up to 385. Now, I understand that's really wide. It's just a supply zone, and we can push into supply. And if you recall, I'm going to put, actually, let's just make this a whiteboard really quick. supply zones, and this is important, a quick lesson, because we are moving up towards them, it doesn't mean that you necessarily have to be short, but there are a lot of signs that I'm going to show you that say, hey, you need to proceed with caution. It's okay to push into a supply zone. I always call this the bear house. And if you were to imagine there's a door into the supply zone, the bears let you in, but just remember, as long as you're inside the house and not through it, so meaning you punch through the backside, that they can kick you out at any time. So mind your manners in here, right? Just tippy toe a little bit, be cautious and understand that we are getting close to and in some supply zones like in the ES futures, we are in there, we are still in there and we have not pushed through the backside, and so therefore a lot of caution. Now, how do you stay in a trade that is going into a supply zone? Well, again, we'll take ourselves back to here. Let's say that this level right here is 100. So basically what I want you to say to yourself, as long as price stays above 100, I will continue that push to the upside. What are some other things that you can look at? Some other things that you can look at is that you have your supply zone, price is pushing up to that hypothetical 100 level. I want you to find the rally where it started and where we are, and I want you to measure, and I want you to find that 23.6 and that 38.2. You got to figure out which one you like best as far as risk is concerned. As long as it's staying above these Fibonacci levels in this most recent rally, I do believe it stays bullish. You also have the cloud. So whatever time frame you're on, you could be using the weekly, the daily. Maybe when we get to the supply zone, you're only using a 1 hour chart. It's totally up to you. But I want you to use this cloud as your reference point. If price is staying above the cloud, that is another factor that helps you stay in the trend itself. So there's several things you can use even though we are approaching supply zones. Okay? So QQQ, as I said, your immediate support is 346.87, your long-term support is 310, and I want you to be cautious towards this 362 to 385. The dollar, nothing is changing here as far as the dollar is concerned. You can see here I put no change. It's done everything we said it would do for over, close to a year, guys. If you look at it, we predicted the move up to here. We said that on this inside candle, we would expect to pull back into the inside and up. It did that, and so far this year, it's literally stayed at the demand level for 1, 2, 3, 4, 5, 6 months now. So half a year just hanging out in this section. And so that is something to take note of. It does feel like it's building up. And bulls, I want you to be cautious because if the dollar really, let's say that the dollar starts to bid over 104 this week and we start to pull back a little bit, I would say caution. Bulls, if for some reason the dollar starts to break down below 101, then things start to look a lot better, and we'll look back and you'll start looking at things and go, man, it feels really overbought, it feels extended. And it really takes me back to 2021 when there were a lot of signs that said the market needed to pull back, but a lot of people were cautious throughout almost the entire year. And the market just kept melting up, and it is possible things like that can happen. I can't help but to think in the back of my mind about the presidential election and how that is actually having an impact on the market itself. So as we get closer to that time, and I know it sounds like it's still a little distance away, but from a perspective of market, stock market, and presidential election, to me, it makes a lot of sense that, no matter what you're seeing as far as economy is related and so forth and rates, that the market continues to stay strong right into that election. All right, let's go ahead and move on. You will see the next chart here. This is where I really want you to start paying attention. So I showed you red boxes or supply zones for some of these names, big names, SPY and the QQQ, and we're getting really close to that, and the earnings is starting to die off, and so the excitement is gone, and now we're left with what? Well, Jerome. What is Jerome going to say? Is there going to be a shocker? Well, from a technical perspective, when I look at the skew, and if you want to look up the skew, just put in Google like skew. What does skew mean in the stock market? And that'll give you a great definition. But these are your hedge funds. And if you go back since the inception of the skew, I found this red line a long time ago, and I put green lines down here, and you'll see that my annotations say risk on. What that means is I want you to think about going long. Timing is the variable. It's not easy. Most likely the market is really pulling down, so your SPY in the background, your Qs would be coming down. Things feel really fearful, but it's always shown that when the skew gets to this level, we have a huge move to the upside. We were right on that. We called that. And now notice where our protect risk off is. Right here, you want to be cautious. It gets choppy. Up here is extreme. And if you take this line and go across, it's just like a trend line. And you go since the inception of the skew, you would see, and this is not a good picture, but if you look all the way back, anytime that we come to this line, folks, it is a matter of time before we have a healthy pullback. Now, when I say healthy, I'm not exactly sure. I can't tell you exactly what that would look like. The best thing we can do is go into the ES charts or the SPY and look for our demand zones and get a better idea how much they could pull back until buyers show up again. Okay, again, timing is the variable, and if you see here, I will buy puts 30 to 90 days out. I've already started some debit spreads. So far as that trade is concerned, I would like to see it come to, uh, start that healthy pullback somewhere between now and 3 weeks from now. Okay, that's what I'm looking for. If I'm wrong and we continue and we stay up here for a long period of time, which is very possible, it does happen. 2021 it happened, and it wasn't until 2022 that we really started to break down. So I kind of feel like this is a repeat. So don't get married to the idea. If you're wrong, you're wrong. Just have a plan on how you can take trades to the upside. As long as our levels are holding, we're going to be talking about that. But again, I just feel like it would be not good if I didn't bring this stuff up. Again, I'm like a lifeguard, right? I'm looking at the conditions and I'm letting you know these are the things we need to be cautious of before we go out there in the water. Okay. All right. So next thing we're going to look at is the fear and greed. And this is just another thing that lines up. It would be absolutely crazy of me as a long-term supply and demand trader to see all of us moving into supply, for our skew to be at extreme levels, the dollar sitting in demand for 6 months, the fear and greed is now tipped to the extreme greed. It just would be crazy for me not to say that this is a caution area. Again, I don't want to scare anybody. I'm not a financial advisor. I'm just simply pointing out the things that I look at that could turn the market on a dime. All right. Now, the next thing, since we're sitting here talking and I don't have a chart on this, what I would like to do is come over here and take a look at the VIX with you. Now, the VIX has been down. This is a quarterly chart, 1, 2, 3. And if I bring this over into the monthly and I look across here, a lot like the skew, you can see and you can draw a trend line, right? And I wouldn't say it's like right here. Matter of fact, and we hit our target. I was saying that the VIX was going to drop quite some time. We could come across here and say, hey, the VIX could still drop towards $12. It's currently at 13. And when you get to these levels, it's extreme. And if you really want to dive into it, I would count, okay, this is months. How many months do we sit around here before we bounce? Now, almost every time a monthly candle comes to this trend line that I just drew for you, it typically takes about a month before we have a huge spike in the market. All right, anywhere from 13 to 24 and so forth. Look at this. Big spikes in this area. So I would definitely be cautious. If we open up bullish tonight and tomorrow, right before Jerome, it's just like there's so many things that I'm going to be absolutely shocked if the market keeps going up. And again, guys, I am a bull by nature, so it's getting a little weird for me to see all these signs and not seeing a whole lot happen at the moment. But we know that timing is the variable. Period. Okay. Period. All right. So the next thing that I want to show you guys is the ES futures. Let's go ahead and pull this up. So we're going to go through this for my future traders. This is where it gets interesting. So remember on the ES chart, I still don't know what's going on here, but the ES, if I just put in ES, then we have our data, right? We have our data that we can look at from way back in the day. Whereas the ESM23, I don't know if it's some kind of glitch, but it doesn't give me the data that I need. It doesn't matter. But we have this chart as well. And we went over this in the class yesterday. We have our inside and up formation. We'll call that demand here. And then we are currently in an inside and down. We call that supply. And we hit our support levels. I changed. So on the weekly, I changed your support levels. And if you notice, I put the support level around two trendy edges right there. And also these wicks, you can see there's a lot of buying pressure here. So if for some reason we get that healthy pullback, I'd be looking for buyers to step in around 41.81 by 41.10. It's wide, but we know that we have a process once we get down there. Again, still in the bear house up here on the weekly, and that's how things look as far as that is concerned. Okay. Now let's go back to the ESM23 because that's where I have marked our charts. And so I have the same levels up here, just so you know. You just can't see the data over here. Going into the daily, I have a resistance now. I used the trendy edge as that resistance. It's around 43.17. We did, by the way, hit our targets to the upside. I went ahead and moved the next short trigger around 43.74. Okay. Now the short trigger was working. All right, because we had it here around the 17 level. And then on the trigger longs, what I did is I really brought them down quite a bit because we have Jerome and because I would expect volatility. And if you look at the VIX, so instead of using like a 23 or 38, I really brought it down more to like a 618 and a 76 or something like that. And you can see they're also confluent, very close to our edges. So again, if for some reason we got a bigger pullback than expected, these are the areas I would expect bulls to show up. This 42.80 is, if you take the rally into consideration, this is your support of that rally. So we could easily just kind of dip only to here and once again find ourselves moving right back up. That is definitely possible. So I need you to be aware of the support level. Going into the 4 hour, this is what we have. I have a demand zone way down here. And what I'm looking at are imbalances in the market. I'm looking for those big candles that I've taught you about. And I want to identify those levels where we could find support. We have trendy edges in here. We have trendy edges in here. And again, we have a trendy edge right here. Always be aware of those. As of right now, going into tonight, your resistance, around that 17 level. Your daily edge support, I'm just taking the edges, 42.87 and then again 42.69. If you were short, let's say you short the PMZ tonight, these would be targets to the downside, okay? And again, that's the ES futures. Let's go into the NASDAQ now. All right, and matter of fact, let's do that. And give me 1 second here, right there. And let's go to NASDAQ, and then we'll come over here. And here's your weekly. I'm not going to change it. You can see the confluence of the cloud inside the support. You have the trendy edge right there, which is support as well. Your immediate support that I told you about last week actually worked really well. Price is held. We are close to the supply zone of 14,848. As we move along here, as far as this is concerned, this, I believe I left the same exact way. Yeah. So our short trigger worked really well. This is resistance. What you could do, because you know where your edges are, you can take this resistance and move it up to this 14,635, and you can move the short trigger into that weekly supply zone. That's up to you. I'm going to leave them here because, again, I'm teetering on the fact that this is a great place for us to start to pull back. Again, I could be wrong, and if we are, we'll update every single morning on what those targets look like. Moving on over, this is your 4 hour. You can see I made that resistance for right now, 14,638. Your support levels are any of the trendy edges that are to the downside. So if you notice, we have the daily, which is also confluent with the 4 hour cloud. And as long as prices hold in that cloud, I would expect these little levels to at least give us some sort of relief bounce. Notice last week, our lower weekly edge worked like a charm. This is a great example. I know that we talked about this, but you'll see more and more proof of concept here. Teach you how to find that imbalance in the market or that demand, but the trendy edge was already there. and you can see buyers stepped in, and it worked really well to the upper edge. So edge to edge is what happened last week. And this week, what's really neat about the future edges is you can already predict, right? We know what they're supposed to do. So your lower edge is already at 14,300 and your upper edge is 14,638. So bulls, you got to get above the upper edges and hold. Bears, you need to see prices at least come down to here to make you happy, but you got to get through the cloud. And if that happens and for some reason this doesn't hold, then you get super pumped right there. But I do believe bulls jump in the market there. Okay. So overall, that's my quick analysis on the market, my overall sentiment. I'm sure you heard it. There's a lot of signs that say pump the brakes. That doesn't mean we won't go long, and I want new traders to understand that. It just typically means that if conditions are saying pump the brakes, then, just understand that. That's all I'm saying. I hope you enjoy this. If you do, please give us a thumbs up. Please subscribe here to the YouTube channel. And then inside the room, if you guys have any feedback and you'd like to see something else, just let me know. But I've been doing the same thing for probably about 7 years. And this is just what really helps me is to be able to talk it, digest it, and then apply it going into this next week. I hope you guys are doing well. Have a safe and enjoyable Sunday. I'm going to see you tomorrow morning, 30 minutes before the market opens. And we may also have Dave, who trades futures with us here at Trendy, be on the market about 20 minutes before that. So sometimes we'll start even a lot earlier and just kind of, talk about the future. So we'll see you guys soon. Have a great day.